Welcome to another S&P 500 analysis. Today is July 23rd, 2022. Last week, we saw the S&P 500 move up after a couple big banks, Bank of America and Goldman Sachs, reported their earnings, followed by Netflix that have reported less worse than expected on subscriber loss. It reported it only lost about 1 million subscribers instead of 2 million expected loss. And Tesla also reported a positive earning result, and the stock moved up 10%. Overall, the tone from last week's earnings was not as bad as feared until Snap reported slow growth due to slowing down in ad revenue, and also reported a loss instead of a profit. And also Seagate Technology reported dismal earnings and forward guidance, mainly due to weakening consumer spending. And the market ended the week in a cautious mode, preparing for what will be more to come next week, when more of the large cap tech stocks such as Apple, Amazon, Meta, Google to report their earnings, and the latest FOMC rate hike announcement on Wednesday. Will we see more upside from the S&P 500, or some of the event from next week will push the S&P 500 back down? In this video, we'll look at the market sentiment, the internals, and the price action of the S&P 500, along with the other major market indexes to see where the S&P 500 and the rest of the market might be headed. Stay tuned. And before I begin, I need you to smash that thumbs up to help me promote this video on YouTube. And be sure to subscribe to this channel if you'd like to see more of these videos. Looking at this weekly chart of the S&P 500, as you can see, we have a positive week. For the week, it gained a little bit over 98 points or 2.55%. We also have a quite large of a range. It had a 193 point range, almost 194 points. And you can see that it's kind of back on the one-time framing up. And also it closed above this 10-week moving average, still closing below this 40-week moving average. But it is continuing this bounce off of the lower trend line from this price channel. It appears that it is trying to get up to the upper edge of this price channel here. So it is continue to bounce up, and also it is still in this lower low, lower high type of a price pattern. So until that get reversed or getting a higher high and a higher low, the weekly trend still remain to be down. Now, looking at this sentiment chart here, as you can see, the VIX is still inside of this 20-30 zone, and it came down a little bit compared to previous week, and it closed the week at just a little bit above 23. And looking at the put-call ratio, it is approaching 1. It came back up near the 0.75, just slightly above 0.75, and moving up to a 1. So the market participants are getting a little bit more bearish now. And looking at the internals, you see the New York Stock Exchange up-down volume ratio been positive most of the week, except on Friday. It actually closed negative with a down day, in which on Friday it was down almost 1%, down 37 points. And the up-down volume ratio was minus 3.6, so it was 3.6 to 1 in favor of the down volume. And also the advanced decline was a little bit negative, and they only have 603 more declining issue than advancing issue on Friday. But throughout the week, it was pretty broad-based, especially on Tuesday when it rallied, and the advanced decline with the advancing issue outnumbered the declining issue by 2,166. And looking at the New York Stock Exchange new high, new low, the number of new low over the new high, it's been fairly low. You know, on Friday, it was only 29 more stock made new 52-week low than 52-week high. And the key thing to take from this chart here is not that the new 52-week high remain pretty constant and small, like only maybe around 15, 16 level. Like on Friday, it closed with 16 stock making new 52-week high. But it's the number of stock that is making new 52-week low came down dramatically, and on Friday there were only 45 stock make new 52-week low, comparing to when it was back here in June. On June the 16th, there were 1,099 stock made new 52-week low on that day. And here is the cumulative AD line, the New York Stock Exchange AD line. Now, we did see this little bit of a negative divergence here a week ago on Thursday. And right now, it seems to have corrected itself by getting back in sync, with a higher advanced decline, cumulative advanced decline. So it took out these high here, likewise with the S&P 500 cash index, and it closed above these peak here. So right now it is pretty much back in sync. And remember last week we were talking about the possibility for the price to close above these this trend line. Then we could look at the possibility of maybe watching the S&P 500 come up at this 4,100 and possibly up to this 4,200. We'll talk about a little bit more about the price action and some of the level to watch when we talk about the cash index in a little bit more detail later on in this video. And look at the NASDAQ market. The NASDAQ market was relatively strong and positive for most part of the week except on Friday. On Friday, it closed down a little bit over 222 points and minus 1.77%. The up-down volume ratio was minus 2.5, in other words, 2.5 to 1 in favor of the down volume. And there were 1,942 more declining issue than advancing issue. But on Tuesday, it was quite strong. It had a broad participation on that rally. There were 2,433 more advancing issue than declining issues. And here on the NASDAQ, new high, new low, similarly to the New York Stock Exchange, the number of stock making new high have not increased dramatically, but stay relatively constant. The other thing to key off is the number of stock that make new 52-week low. That too in the NASDAQ market also came down dramatically. And you can see the difference between the number of new high versus new low. It was only 53 more new low than new high on Friday. Also on the NASDAQ accumulative AD line, we did see synchronization between the AD line and also the NASDAQ 100. See, the NASDAQ 100 came above these high, move above these high. So did the cumulative AD line move above these high. So on Friday, it pulled back a bit. So we'll keep an eye on it. But right now, it is in sync. There is no divergence between the cash index and the cumulative AD line. So from the sentiment chart and also the internal, we are seeing the market participants still being a little bit of a cautious mode and getting a little bit more bearish. And as you can see from the put call ratio, is getting near this 1.0 level. Is they're close at 0.946 or almost 0.95 on Friday. But the advanced decline and also the up down volume ratio and also the new high, new low did not show us the market is in a panic selling mode. And we noticed that the advanced decline and also the up-down volume ratio was relatively strong throughout the week, except on Friday. We got a little bit of a sell-off on Friday, and that is probably the market participant all preparing for the coming week, in which we'll see another round of interest rate hike, and they might be just kind of doing a little bit of readjustment and not taking too many positions over the weekend. Now let's take a look at the cash index, the S&P 500. On this daily chart here, as you can see, I still have this level here, this pre-pandemic high. This is 3393.52. And also on Friday, the S&P 500 closed only down 17.78% from its all-time high. So once again, it is above the 20%. So that placed the S&P 500 in a correction territory, not in a bear market territory. Closer look here. On these price action here, I'm expecting to see this gap to get completely filled next week. Although it came close and filling it this week, but I'm looking for the possibility of this coming up and close this gap and maybe push up into this trend line, get up near this 4,100 level. And we probably see a little bit of a pullback and possibly come down and test this 4,000 area. And then we get another push and see would it be able to push through this channel and come up to this 42, take out this high here, come up, to the 4200, take out this high, then we essentially have formed a higher high. Then we could look for a pullback of a higher low. So that would be one of the positive upside scenario. Now, if the price could not take out this gap and stay above it, and come down, and let's say come down and fill this gap here down near the 3800 level, and unable to get a bounce back up, and instead it will continue to come down and take out this low here near the just slightly above the 3700. And here's that there's another small gap here, and if you come down and fill this gap, then there's a good chance that I will be watching for the cash index to come down and test this low. Now, of course, it's not going to do that in 1 week. I mean, that's a little bit of a near-term type of scenario, but keep an eye on that possibility of the direction of the price coming down. So if it is unable to pull above this level here and get above the 4,000 and come down and fill this gap at 3,800. So in other words, watch the 3,900 level next week. If it dipped below 3,900, then look for the possibility of this gap down here at 3,800. And here looking at the NASDAQ 100 daily chart, again, I just want to remind you that there is this pre-pandemic pivot high here at 97.3657. Okay, just bear that in mind. And also notice that the price did stay above this 50% retracement level here in the Fibonacci retracement. And appears that it is trying to work itself back up toward this 38.2 near the 12,947. The NASDAQ 100 officially still in a bear market because it had lost 26% from its all-time high. So it's greater than 20%, and that would put it in a bear market territory by definition. Now, for the coming week, I will be watching for the price to see would it be able to actually come up toward this trend line and take out this high here. In other words, get up above this 13,000, then we'll see a higher high and see would it continue to push up, get up to the work toward this 15,300 level here. But that's a way away, right? It's not like it's going to do that all in 1 week. But we're basically looking at the possibility of making a higher high here. But if it is unable to make a higher high, then watch for it come back down to this 50% retracement level and see would it be able to essentially hold this trend line here. And if it doesn't and it start working itself down, then look for this low here near the 11,000 level to get tested. And for the Russell 2000, here is the Russell 2000 pre-pandemic high here, which is 1715.10. So you can see that it bounced off from it. It dipped below it for a few weeks and then it came back up. So right now it appears that it is trying to get above this trend line and come up to this 38.2 retracement at 1888.70. So be watching to see will the price come up and take out this 38.2 and work toward this 1935. And if it does get above this 1935, then we will essentially looking for a higher high, then maybe a back test down to this 38.2 before it pushes back up and try to take out some of these level up here at this 2075 and possibly get up to this 2134. But again, that is not a next week type of thing, but it's just kind of give you a general direction of the price action if it start breaking some of the key high here. Okay, so the key thing is would it be able to come up and take out this high and move up to this near this level at 1935 area. But if it's unable to get above this trend line or even this 38.2 retracement near the 1900 and start coming back down, then look for this 1715.10. That's the pre-pandemic pivot high to get retested. And again, essentially we're looking for this to hold this trend line. If it's unable to hold this level, then it is basically book this trend line, and we'll be looking at this low down here near 1650 to possibly get retested. And here on the Dow Jones Transportation, we see that it is still in the bear market territory, is still down a little bit over 24% from its all-time high. And right now, it seems to be trying to come up to this 14,000 level. And it is approaching, just sitting right near this 38.2 retracement at 13,752. And if we take a closer look at the price action here, so if we could get above this 14,000 and work itself for this 15,067 area, then we see that it had put in a higher high. Then we could look at the possibility for this to come up toward this trend line, and that's basically in confluence with this level here, 15,067. Now, if it is unable to make up to get up to this high here, near the 14,500, and instead it come back down, and if it come down and retest this level near the 13,000 area, then watch this gap. If this gap gets filled, then most likely we're going to see it come down and test this low once again. And looking at the Dow Jones Industrial, see the Dow Jones Industrial is only down 13.72% from its all-time high, so it's not anywhere close to the bear market territory, and it is still in a correction territory. And also notice that it came back up and sitting right near that 32,000 area. So right now we're basically looking to see would it continue to move up and take out this high here up above this 33,000. So you can see that got beyond these retracement level here, and it is way above this pre-pandemic pivot high here at 29,568 after it came down and almost touched it back in latter part of June. So right now we're essentially watching the Dow Jones Industrial to see would it believe this gap is still need to be completely filled. So to see would it be able to fill this gap next week and get above here at this high, take out this high and move up toward this 33,500 and come up to this trend line. If it could break this trend line, back test this high and push up, then essentially got a higher high, and that would be a different price action. Then we'd be looking for this thing to move up toward this 35,500 area. Now, if it is unable to come up and stay above this zone here, this 32,000 level here, then we're basically looking for this thing to come back down and try to fill this gap down near this 30,700 area. So let me see exactly what that is. This low here on this candle is 30,775. So we'd be watching to see would it be able to come down and fill this gap and then get a bounce off of it and hold above this low. If it dip below this low, essentially come below, get below this 30,000, then we'd be watching this low get tested and possibly come down and test the pre-pandemic pivot high at 29,568. And for the New York Stock Exchange Composite Index, as you can see, it put in a double bottom right near these, the pre-pandemic pivot high here. And right now, it seems like it is trying to break this double bottom pattern. Be aware that this New York Stock Exchange Composite Index is only down 15.24% from its all-time high. So again, this index is also not in a bear market territory. It is in a correction territory. So right now, we're essentially watching to see would it be able to break above this 15,000. And if it does, that is breaking this this double bottom pattern here, then we could look forward to possibly come up for this 15,800 and see would it be able to come up to 16,000 and take out this high. Then we could see a higher high and also come up to this trend line here. So that is the upside price action to keep an eye on. Now, if it's unable to take out this break out of this double bottom pattern and come back down, then watch for this 14,183. That is the pre-pandemic pivot high level. And if it's unable to hold above that, then look look for these low right here near the 14,000 get retested. And look at this weekly chart of the 10-year yield. As you can see, this week the 10-year yield continue to pull back to this 2.75 level, and we're saying that most likely going to be chopping around down these level, and until the next rate announcement, we'll probably see the 10-year maybe bouncing back up once again toward this 3.25%, and possibly move back up toward the 3.5%. So we just got kind of waiting for the FOMC announcement on next Wednesday. And here, looking at the U.S. dollar, we're saying that after it broke above this trend line, got up to this 109 level, we're expecting it to pull back and get back underneath this trend line and possibly chop around. It might be even come down to this level here near the 105, 104 area. So we're basically looking to see what it come down here and chop, and then make another push. Wouldn't be surprised that we'll see the dollar come back down to this zone here before make another move, because that would also come down near this trend line. Right now, the dollar is too strong, and I think the Fed would like to see the dollar come down a bit. And for the crude oil, it seems to be chopping around inside of this retracement zone here. Right now, it's kind of sitting right between the 38.2 and the 50% retracement zone. And got this little bit of a price zone here, support zone. So right now, it seems to be holding that. So wait to see would it be able to get back above this 97 level, essentially breaking out of this 38.2 and also break this trend line here. Then we could see the crude oil price could try to make its way running back up to this area once again, and possibly get up to this 130 and 50 cents area. I don't believe oil have run its course yet. I think there still could be a higher price to come. But of course, it could run to a little bit of a correction before it make a push. And I wouldn't be surprised that it could even dip below. If it dip below 90, it could come down to this $80 area at this 61.8 near this trend line before we see another bounce. Because there is also another price zone here near the 76.98 area that we could also see some potential support here. Okay, that's basically these highs here. And for the silver, not too much to write home about. It is still trying to hold above this 1780. So until it shows some price action that it wants higher prices, I would be just kind of watch to see would it be able to hold this $17.80 level. Now for gold could be getting a bit interesting here. We're going to watch next week to see how this thing chop around. And if could stay above this zone here, that might be a possibility of looking for some trade location to play it back up here. But of course, next week is FOMC meeting and the rate announcement, so anything is possible. So you kind of have to wait until after that announcement before make a little bit of a decision on gold here. But until then, just kind of keep an eye on it. Definitely right now seems to be holding this zone here, and that is a positive. So if it break below this zone, then yeah, we could see us come down to this 1546 area. But if hold above this zone, then I'd be looking for this thing to move back up above this 1800 level. So in summary, the market is continued to bounce off its June low, and it could be approaching a potential resistance. With the large cap tech stock reporting earnings next week and the latest rate hike announcement from the Fed, the market reaction could be either making a higher high or it could reverse back down and try to test the recent low and put in a lower low. Now from the market internal, they appear to be telling us that it is preparing for more potential upside. But how much is that upside is anyone's guess. Is it 4,100 for the S&P 500, 4,200, or 4,500? Now, just a reminder, I will post a separate video this weekend where I will analyze the price action and give you some price scenario for the S&P 500 ETF, the SPY. the Nasdaq 100 ETF, the QQQ, and the Russell 2000 ETF, IWM. In addition, I will also show you my analysis and price scenario for Apple, Tesla, and some of the stocks scheduled to report earnings next week, such as Amazon, Meta, Google, and of course, Apple. So turn on your notifications so you will be notified when I have posted this video. In the meantime, be sure to smash the thumbs up to help me promote this video. Thank you for watching and stay safe.